Welcome to Investors Insights. Our topic today is Timberrr. I am joined today by my distinguished colleagues, Bobby Norman, Trey Booth, Adam Van Zandt, and Ashley Page. And there's a reason we chose that topic, and we're going to dive right into it here because we think it's an important issue you need to be aware of. You've probably ridden around and noticed all the construction taking place in your area. Home building is going through the roof, as they like to say, pun intended. And with that, Bobby, talk about what you brought up, which then caused other debate and discussions in our portfolio strategies reviewed this morning about housing and about lumber.
Yeah, Greg, it's no secret that one of the bright spots in the economy throughout the pandemic has been the strong housing market, and we're starting to see some weakness because of higher lumber prices. And so actually we've seen U.S. lumber prices rise 170% from April through August, driving the cost of the average new home up over $16,000. So the cause of this was because of the coronavirus lockdown, supply shortages, and the labor shortages caused 2/3 of the firms to delay or cancel construction projects back in March and April, causing a drastic drop in demand for labor. But the drop in production caused a major shortage. And when construction picked up in May and sending lumber prices soaring the past few months. So there's a dark cloud on the horizon in housing. And if we continue to see lumber prices where they are higher, the housing market could go through a slowdown. And if housing goes through a slowdown, that could very likely add to the volatility that we're seeing in the market. So we're watching lumber prices and the housing market very carefully here.
Well, and I thought that was a great point, and also it opens up a whole nother discussion about interest rates and how low mortgage rates are, and what's taking place there. And it kind of sums up the year. You've got a lot of things that are really strong, and you've got other situations which are weak. And, rates are low, and so people are refinancing, they're improving their homes. New construction is all around us, but the question becomes, how long can that go on? And with that, Trey, you brought in, what took place over the weekend here in terms of Ruth Bader Ginsburg and what's developed there on the political horizon, and also from the standpoint what's going on in Europe, which are also two other factors we need to be looking at.
Yeah, Greg, this weekend we got a lot of big news, very sad news out of D.C.
Very sad.
Justice Ruth Bader Ginsburg passing away. And while that will have very long-term impact on the jurisprudence and the legal field of the United States, depending on who's set to replace her, but in the short term, it has impact on the markets. And that's really what we want to focus on here, not the politics of the long-term Supreme Court, but the short-term impact on the markets. And the reason it has impact on the market short-term is that as time has passed and as we've gotten closer to Election Day, the likelihood of a second large stimulus bill, somewhere between $1.5 and $3 trillion, has continued to decrease. And this is another cog, just something getting in the way of the wheels of D.C. working towards that stimulus. A recent PricewaterhouseCoopers survey said that over 80% of business executives believe that another stimulus is needed to get the companies back on their feet. D.C. was moving slowly but surely towards compromise, and this is just another very large issue for them to disagree on that could likely stop what was a very large and likely very beneficial stimulus bill that would happen before the election that could boost markets, boost spending, and that's really where in the short term we're looking and focusing. And so this is very, it's very sad on a personal level, but on a market level, it's very detrimental to see this new, I'll say, hurdle that Congress and the Senate would have to get over, and it just makes it very unlikely that a large $3 trillion stimulus bill can be passed before Election Day.
Bring up what's going on across the ocean here because we've got to watch the world as well.
That's right. It's another big bit of news over the weekend is that the UK and Europe is potentially looking at another lockdown. As we've seen cases in the U.S. on this chart, you can see the cases in the U.S. have started to fall. So that's very positive. We've seen economic expansion, the housing market in the U.S. starting to turn. In Europe, they're getting the opposite. We're seeing cases spike in Europe. And so that's concerning from a market standpoint over in Europe and international markets, but it's also concerning to the U.S. because if Europe shuts down, are they ahead of us and we're just about to have to shut down, or are they behind us? Are they seeing, is this their wave that we saw back in the summer, or is this the indication of a wave we'll see in the fall? And so that's putting a big damper on the markets in hopes of reopening in the U.S. So those two factors are really putting a lot of uncertainty, which we all know the market does not like uncertainty. It really puts the COVID uncertainty back front and center.
Well, and speaking of uncertainty, we can always feel very confident and certain that the month of September has historically been a volatile month year after year. And with that, Adam, you talked about technical analysis because in last week's vlog, you told our viewers what the resistance and support levels were for the S&P 500. And so go back over that and tell them where we are now and what they need to be watching.
Yeah, Greg, I appreciate that. On Friday, we saw the market, the S&P 500, break through that lower support level. So we've been talking about that 3,300 for a long time now. That's kind of been our marker. So it finally broke through and it held on Friday and put us below the 50-day moving average. And to go back to Trey's point, with election risk coming up, and Greg, you said it yourself, with September and October, we're going to see a lot of volatility with election risk coming up. And so one of the marks we're looking at now is the 3240 will be your next one, and then the lowest one at 3100. And that 3100 will actually have a 10% pullback. So we'll see if this, continues to be a volatile next couple of months and see how the consumer reacts to the markets.
Yeah, there are those that think that this market has moved so fast that possibly we need to take a little steam out of it, and you could see a 10% correction. But there are a lot of positive things taking place as well. And on that note, Ashley, while Trey was talking about the stimulus bill may be delayed because of what's going on out of D.C. right now, you brought up a great point about a program they'd already introduced. Talk about that.
Happy to, Greg. It's the Federal Reserve's Main Street program. And the key we want you to know is that is aimed at medium-sized companies which have employment, Greg, of around 1,000 people. Well, the Fed has had that in place for a while to the tune of $600 billion. Well, the problem is only $1.5 billion has been used.
Wow.
Well, what ended up happening is there were obstacles between the banks, the Fed, and the FDIC, the regulatory. On Friday, those groups met, solved those obstacles. So what we feel like is going to happen between now and the end of the year is about that remaining amount, which is most of it, nearly $600 billion in stimulus, is going to be aimed at middle-sized companies, which have great multiplier effects. They buy from small. Sure. So we've got a lot of stimulus left between now and the end of the year that's about to roll out.
Right, and so everybody needs to be watching that as well because that could really keep the strength in the economy. And so you could possibly, if housing starts to slow down, there's other sectors of the market that could actually be picking up. So that would also cause some rotation in the market, which would probably be a welcomed situation at this time. So on that note, we're going to keep you updated. Please continue to watch us on this vlog, continue to share it with others. We always are appreciative of that because of the introductions and the phone calls and meetings. We want to continue having our virtual meetings with our clients or social distancing, talking on the phone. And in addition to that, on social media, we're going to continue to highlight those stories, that research that is important at this time. So keeping you updated as we continue to head toward the end of September, and we'll look forward to talking to you in the coming week. Thank you.